morning. We are live. It is Monday, December 12th, and this is the Deep Dive with Keeping Current Matters. My name is Kate Rezabek, and I'm so thrilled to be here with you this morning. Starting off the week talking about the most important topics in the housing market. Always a pleasure to be here to have our KCM members who come back week after week. Thank you for joining us. And of course, if you're new to KCM, welcome. Thank you for being here this morning. And, prioritizing becoming the market expert. We've got so much to talk about today. Can't wait to dive into all of that. But first, as always, be sure to pop into the comments. Tell us where you are tuning in from, where you're watching this morning. We love to see agents from all over the country joining us. And we do have a lot to talk about today. I'm going to share lots of slides, graphs, everything you need to know about the 2023 housing market forecast. So if you're a member, remember you can pop into the member area and download the slides today so you can have those, share them in your sphere, share them with your clients, be that market expert. And if you're new to us today, it's trykcm.com. I'm going to tell you a little bit more about that link at the end of our deep dive, where you can download these slides and have them in your back pocket as you head into the end of this year and get ready for 2023. So, as I mentioned, we're going to be talking about the 2023 housing market forecast. And I'm going to share these slides with you today. So let me go ahead and pull those up. I think the housing market next year, there's so much coming our way. And as we talk about the forecast for next year, this is really about what the experts are saying, what's most important as we go into the new year. And we're pulling all of that together for you to help you make sense of all of it. And I think the best place to start is really to talk about, what happened in 2022. And 2022, the housing market was really defined by inflation and rapidly rising mortgage rates. We know that the Federal Reserve has been trying really hard to bring inflation down, slow down the economy, get that under control. And that's really defined what's happened this year. And of course, as we go into 23, what's ahead for next year? I think that we're not out of the woods yet. And as we look ahead to next year, it's going to be defined by, can the Fed bring inflation down and keep it down? We're going to talk a little bit about that today. And will we see stability in the market? There's been so much volatility, especially around rising mortgage rates. Will we see that stability next year? So what I'm going to share with you today is a look at projections from the experts on mortgage rates, on home sales, and home prices. And that'll get you headed into the new year. So I want to start with this quote from Jerome Powell, the chair of the Federal Reserve. This is actually a quote that we shared with you earlier this year. It's from June of 2022. And it says, I'd say if you are a home buyer, somebody or a young person looking to buy a home, you need a bit of a reset. We need to get back to a place where supply and demand are back together and where inflation is down low again and mortgage rates are low again. And this really sums up the essence of what the Federal Reserve is out to do this year, to slow the economy. We know that housing is a big part of that, to bring inflation down and get the housing market as one of the pieces that needs to come back into balance. And this is all driven by inflation. So we're going to talk about that a lot today. You're going to hear me say it's all driven by inflation quite a bit. There's a lot more work to be done, but we're, the economy right now really in a place where we're trying to get, rates down. We've seen that impact demand. It's impacted home sales. That's had a downstream impact on home prices. There's been all of these factors in 2023 that have really led to that. And, the Federal Reserve is going to meet again later this month, actually this week. And we're going to be looking for that impact down the road. So as we talk about mortgage rates, that's the first topic we want to tackle in the forecast. I think we can start with, where have we been so far this year? As I mentioned a moment ago, 2022 is really defined by rapidly rising mortgage rates. You can see this is a look at the Freddie Mac 30-year fixed rate going all the way back to January. And if you've followed along with us, you've definitely seen this graph before. We've been bringing it to you all year. And what you can see is at the beginning of the year, mortgage rates were almost at that historic low, and then they have risen pretty significantly through the year. And, we've seen a little bit of a reprieve over the last few months, maybe a nod to inflation potentially starting to take a turn, potentially starting to come down. Like I said a moment ago, I don't think we're out of the woods yet, but we need to keep our eye on that. But we've seen a little bit of relief in mortgage rates recently. But the story this year is not about where the number is today. It's really about how mortgage rates rose so quickly. They more than doubled this year, and we have never seen that happen in a calendar year. So what does that do to the housing market? Well, it slows buyer demand because, everybody's looking at this going, fear, uncertainty, not sure where they're going. Are mortgage rates going to keep rising? And that's what slowed the pace in home sales this year. It's not necessarily about the fact that mortgage rates ticked up over 7% last month, but really more about that rapid rise throughout the year. And what the housing market is looking for is stability. And this year, we've seen a lot of volatility in the market. And so, really looking for that stability to come into play next year. And that's all about inflation. So, let's talk a little bit about what the experts are saying, what the experts are projecting for mortgage rates next year. This is a look at what Freddie Mac, Fannie Mae, MBA, and NAR are projecting for 2023. And it's the latest forecast we have that came out in November. And really, if you average them all together, they're saying somewhere between 6.5% next year, maybe a little higher at the beginning of the year, maybe coming down a little bit. But again, really not about the number, but what we're looking for is stability in the market, because that brings certainty back in, that brings buyers back in. It's the volatility that has really been a challenge in the housing market. And as I look at this graph, this chart, mortgage rates are really hard to project. Even the experts that are projecting them right now are having a challenging time kind of pinpointing exactly where they'll go. So what I don't want you to focus on is the exact number, because whether it's somewhere between 5.5% or 6.5%, wherever they may land, stability is really what we're looking for, is for mortgage rates to stabilize. And that will bring a little bit more predictability back into the housing market. Right now, we know as inflation is high, mortgage rates are going to be high. The Fed is continuing to try and bring that down. We've seen little hints of maybe that's starting to happen, and we're going to continue to watch that to see where mortgage rates will go. And I think this quote from Greg McBride at Bankrate says it well. It says, mortgage rates could pull back meaningfully next year if inflation pressures ease. Again, it's all about inflation. And that's certainly what we're looking for. We're watching inflation, we're watching the 10-year Treasury yield, we're watching all of those factors to see where mortgage rates go. Now, as we continue to talk about that, as we watch the Federal Reserve meet this week, we know they don't call mortgage rates, but they definitely have an influence on them. And if they continue to make aggressive hikes, as they have throughout the year, we may see mortgage rates go back up before they come back down. We're watching inflation, we're watching that reaction to see what happens in the market, and truly looking for that stability. And if inflation pressures ease and mortgage rates pull back, that is certainly what we hope will happen. That is definitely what we are looking for. So as we start to talk about mortgage rates, we know they've had a major impact on home sales this year. And as we look ahead to home sale forecasts for the coming year, I think inflation has really had an impact on that. Mortgage rates are a driver. So what I want to do next is share with you a little bit of what experts are projecting home sales where they'll land this year, the look ahead for next year, and how that's all coming together. So let's take a look right here. This is total home sales, and it's going actually all the way back to 1999. It's a combination of new home sales and existing home sales. And when we look at the forecast for 2022, where we're projected to end this year in just over a few weeks, it's looking like experts are saying about 5.8 million home sales this year. Now, let's put this into context. If you're coming off of last year, where we had a record number of home sales, almost 6.9 million home sales, 5.8 feels like a big slowdown. I'm sure you've felt that all year long. Feels like last year we were just completely cruising, buyers frenzy, lots of transactions. It was a very different year than where we've been right now. And if you use that analogy that we talk about all the time, last year felt like you were driving down the highway, 85, 90 miles an hour. You were cruising. You came around the corner, saw the flashing lights, pumped on the brakes, and started to slow down. And although you were going the speed limit at that point, it felt like you were crawling. And that's probably what you've experienced in 2022. So 5.8 million feels like a big drop off right there. And we haven't seen 5.8 million home sales since about 2015 or so. So if you've gotten into the business over the past 2, 5, within the last 10 years, this feels a lot different. And if this feels slower, what I want you to kind of take a look at is the projection for next year. Experts are saying about 5.1 million home sales. So next year is going to feel a little bit slower. We know inventory is still significantly low, not enough homes on the market. And as we look at this forecast, I want to park here for a second because let's put this into perspective for a moment. As we look at 5.1 million home sales projected, what the experts are saying for next year, we know that they're making that forecast right now in what we'll call maybe like the depths of winter. And it's a little chilly out there. So inflation is high, mortgage rates are high, inventory is low, new construction is slowing, buyer demand isn't as high as it was last year or at the beginning of this year. So all of those factors are kind of layered into this projection. But what I imagine, where I see this number going, is a little bit higher because experts tend to reproject and reforecast as the year unfolds. And as we look for that nod to inflation potentially coming under control and mortgage rates potentially coming into a more stabilized environment, we may see this number tick up. And it's definitely something we're going to keep our eyes on over the next few months, next year. We're going to keep you posted on home sales as we go. But right now, the projection roughly around 5.1 million home sales, something we haven't seen really truly over the past 10 years as you look at this into context. So let's break down that 5.1 million. You can see where it's coming from. We like to average a consensus together. So Fannie, Freddie, MBA, and NAR, anywhere from 4.5 to 5.5 million brings us down to an average of about 5.1. The truth is probably somewhere in the middle, probably not the high, probably not the low, but we like to look at the average, and it is the most current data that we can bring you. So we will continue to update this for you as the projections and the data changes. So let's also talk about what could potentially kickstart home sales again next year. I think this quote from Lawrence Yun really says it well. So the upcoming months should see a return of buyers as mortgage rates appear to have already peaked and have been coming down since mid-November. So as we're looking for that stability in the market, we've seen mortgage rates rise. We've seen a little bit of relief over the last couple of weeks. We certainly hope that they peaked. We're going to continue to watch inflation, continue to see where that goes, but that could potentially bring more buyers back to the market as this continues to play out. So as we think about more buyers coming back to the market, we also want to talk about home prices. This is a big question on everyone's mind right now. And if you haven't watched the deep dive from last week, I definitely encourage you to go back and watch that. David went really deep on home prices, where they are today and what's happening with home prices. So if you have questions about that, definitely go back and watch last week's deep dive. And what I'm going to share for you right now is the forecast for what the experts are saying about prices in 2023. So here's the latest look at what 7 of the key experts are forecasting for next year. This is year over year home price appreciation. And what we're seeing is some are saying a little up, some are saying a little bit down. And again, as we average those all together, we're looking at roughly neutral or flat home price appreciation for next year. So, this again is all based on local markets. Some of the more overheated markets are going to see more movement in home prices. That was a big topic that David talked about last week. And we'll see more change in those markets. The reality is we're coming off of 20% year over year home price appreciation at the beginning of this year. And, this feels a little bit different. Right now, we're at about 10%, 11% year over year home price appreciation. And as we look into all of the factors that go into next year, roughly neutral. The truth is, no one is calling for massive declines in home prices, but roughly neutral home price appreciation. We're still seeing low inventory and more buyers than sellers on the market. So that's going to continue to keep upward pressure on prices. It's going to continue to keep prices in check. But year over year isn't the only way that we look at this. We also look at month over month home price appreciation. And what we can see right now, and again, go back and watch last week's deep dive, but as we've seen a little bit of month over month decline in home prices, that decline is getting a little bit smaller, especially in some of those major metros. So we are going to continue to watch home price appreciation. This is very local, so always be sure to pull in your local data to layer on top of what the national forecast looks like, because your clients want to know about both. They're hearing national forecasts in the news. They want to know what's happening in your market as well. And being able to be that market expert and share this data with them is really mission critical. And so I think this quote from Mark Fleming says this very well from First American. It says, the housing market, once adjusted to the new normal of higher mortgage rates, so that's essentially where we're sitting now, will benefit from continued strong demographic-driven demand relative to an overall long-run shortage of supply. So we still have demographic demand out there, especially among millennials, the largest home buying cohort right now. There's a lot of people out there who are waiting for the economic dust to settle, but at the same time, the demand and the interest is still there. So once we start to see some of that stability, once we start to see some of that consistency, the demand is there, supply is still low, and that should continue to keep home prices in check in most markets. And as we look ahead, I think this last quote from Fannie Mae, Doug Duncan at Fannie Mae says it well. It says, from our perspective, the good news is that demographics remain favorable for housing. So the sector appears well positioned to help lead the economy out of what we expect to be a brief recession. I started at the beginning and I talked about it's all about inflation. And the more we start to see that nod towards the Fed potentially bringing inflation down, really working hard at that, we start to hear more chatter about a potential recession. And, there's a lot of people out there saying that's more and more likely right now. And so if we come into a recession, that is kind of the big question that a lot of people are asking is what happens to the housing market? And what we know from history is that in times of recession, over the past 6 recessions in this country, mortgage rates have actually come down. Now, that doesn't define exactly where we'll go every single time, but history does teach us a lot. So, the housing market with its demographic demand, with inflation, the nod to inflation, ideally, hopefully getting under control over the next year, mortgage rates ideally stabilizing, that could help the housing market lead the economy out of a brief recession. We certainly don't wish a recession on anyone, but the question is, what does that mean for the housing market? And so as we think about what's ahead for next year, as we look at 2023, what the experts are saying, the story is really around, are we going to be able to see inflation come down and stay under control? And will we find stability in the housing market? That is going to be the story for 2023. And we will continue to keep you updated on all of those factors as the year unfolds. So I want to wrap up today and make sure that you have everything you need to be that market expert next year. And if you want more insights on today's housing market, I encourage you to go to trykcm.com/MMR. You'll get our December monthly market report. It's now available. It's going to include a recap of this forecast, as well as a deeper dive on mortgage rates, and a section on headlines, why we don't want to watch confusing headlines and we need to be able to sort that out for our clients. So all the answers, everything that you need to be well positioned going into the new year. I encourage you to go take a look at that for sure. If you are a member, you can download these in the member area. And if you're new to KCM, try kcm.com/MMR. All right, I'm going to pause here. And Jessica, do we have any questions that came up?
Hi, Kate. I actually have not seen any questions come through this morning.
All right. Well, thank you so much, everyone, for joining us. Always a pleasure to be here with you. David will be back next week, and we look forward to seeing you there. Thanks and have a great week.